All right, housing. It's all about money. There are fresh concerns about our economic outlook, with new figures showing house prices across the country, not just in Auckland, are rising at their fastest rate since 2007. Property values are 10% higher on average than they were a year ago. They've been driven, of course, by the Auckland housing bubble. Financial advisor Martin Hawes joins me now. Martin, great to have you along. This is interesting, isn't it? Because what we're seeing now is a continued unsustainable rise in house prices in the country.
Yes, and I think it is unsustainable because, it's the 10% figure across the country, but the real concern is obviously Auckland, and that's near 20%.
All right, now we'll talk more about specific areas in a moment, but you have extrapolated the figures out based on house prices continuing to increase the way they have done in the recent past. Give us a couple of years. What sort of prices are we looking at if things continue to move in this direction?
Well, if you take the old Auckland City Council area, at the moment is $1 million. So if you look just 2 years, and it's a fairly short period of time, you look just 2 years ahead at this kind of growth rate, you're looking at the average house in the old Auckland City area of 1.45 million. If you go out 5 years, then it's actually near enough to 2.5 million for the average house.
Price of a house,
yes,
near to 2.5 million.
Yeah, it gives you some kind of idea of the scale of the rises that we are seeing at the moment.
Are you surprised that with these latest figures that have come out, we've been talking about this for so long, but are you surprised that these rises are not abating in any way at all?
I'm not really, because immigration is strong, and immigration gives a really good correlation with house prices, and that's probably true right around the world in every area. But the other area is that the government is working very strongly on the supply side of things, that is, build more houses. You can't just push a button and get more houses. No. So that's going to take a fair bit of time. So I'm not really surprised, and whether it will continue for 2 years or 5 years, I don't know. But it's going to continue, I think, for another year anyway. All
right, so given that, what is fueling it? The government have said that the price of money is not going to make much difference. But, I wonder just how much difference that is making, because I suspect people like me, people like you, we know that there is absolutely no point having money in the bank, no point at all. You're wasting your time. And a lot of people are going to be thinking, well, we need to buy into this. We should be borrowing money to further fuel the housing market.
Yeah, that's right. And the market has it sort of has a mind of its own now. It's got its own momentum, and it's almost like it's a live animal, and it's just going to keep going regardless of what happens. I think the price of money would make a difference, but the Reserve Bank can't do that because inflation's only at 1%. It's right at the bottom of its range of 1 to 3%. So that's not going to happen. We can forget about that happening. I think that building more houses is going to ultimately be the answer. It's going to feel like a really long wait. But of course, the really big risk, Paul, is that we overbuild. And I think, markets almost always overreact. So that we build too many houses, and at some point in a year or 2 or 3, we actually get some kind of crash.
Okay, and that was going to be my next point. I mean, what obviously we want to see is a sensible and controlled slowdown in the market and rationalisation of house prices, which is still entirely possible. But with every huge increase, it is less likely, isn't it? Are you now picking that there will be a housing crash?
No, I'm not, but what I am saying is I sort of don't know at this stage whether there will be a crash. I think it could all still end nicely at the moment, but every month that goes by, every quarter that we see figures like this, means that the risk of a major crash, I think, increase. I spend a fair bit of time in Ireland, and I watched their property bubble inflate, and I watched it crash again. Now, there are quite a lot of differences between Ireland and New Zealand, but there were some similarities. For example, they had very high immigration. But one of the things the Irish government couldn't do was control interest rates, because they're controlled in Brussels. So they just had to watch prices carry on. But basically, the crash, when it came, Irish house prices went down by 50%, and it brought the country to its knees. It pushed the country into receivership.
All right, just very quickly, Martin, is it a good thing that we are now seeing this spread far beyond Auckland? Hamilton, obviously, Tauranga, Whangarei, Franklin, Hauraki, Waikato, they're all experiencing spikes in housing. Is that a good thing?
I don't really think. I'm not sure whether it's a good thing or a bad thing. I can't see any way that it's a good thing, because what I do fear is that if Auckland property prices do end up crashing, then there will be a contagion that will spread out,
and we'll just take more people with us.
And that will be even worse for the country.
Right,
yes,
right.
Absolutely.
All right, we will be in touch again when I suppose we talk about the next huge hike in house prices. Martin Hawes, thank you very much for joining us, financial advisor,
Thanks, Paul.
specialising in housing. Martin Hawes.